To me, the project generation business model is one of those things that I think makes it a little bit easier, especially for quality teams, to raise money.
Nevada has been recognized as perhaps the world's best mining jurisdiction for quite some time here.
It's a combination of a whole pile of things, Brian. Scale, jurisdiction, technical team, and the underlying deal.
Welcome, everyone. My name is Brian Leni. I'm the editor of Junior Stock Review Premium. I'm a newsletter writer. I also have a podcast, which I do with Bill Powers on mining stock education. And I have my own YouTube channel, which is Field Notes, where I take you to the sites, the projects of the companies that I'm invested in. The Junior Stock Review Premium is written weekly. It costs $750 Canadian annually. And I also publish the Diligent Speculator, which is on the cheaper end of things and on the lower risk end of things with the senior producers, the royalty companies, and the advanced developers. And that is $120 Canadian per year. Excellent prices, especially if you're an American. We'll start the webinar off with introductions to both companies, Headwater and Inflection. And from after that, those brief introductions, we're going to get into a list of questioning. It's a list of questions that I put together myself. And I think any investor that's looking at project generation companies should probably focus on, especially how Alistair and Caleb answer those questions. So we'll start with Headwater. Caleb, if you want to start us off with a brief intro.
Yeah, well, thanks a lot, Brian. I'm Caleb Stroup. I'm the CEO of Headwater Gold. Headwater is an exploration company focused on gold and silver in the western U.S. with a specific focus in the state of Nevada. And our approach is to carry a large portfolio of very active exploration projects. Right now, we have about 15 projects in the portfolio and leverage partnerships with major mining companies to ensure consistent and aggressive exploration across that portfolio. So right now we have 6 different earn-in partnerships with 3 different major mining companies across the portfolio, mostly in Nevada, but also in Idaho as well. And I could go on and on, but I guess that's the purpose of the webinar is to go through some of this point by point. So I'll leave it there.
Alistair?
So yes, Alistair Waddell, I'm the President and CEO of Inflection Resources. We're a Canadian and US listed company focused on exploring for very large copper gold deposits in Australia. We've got 2 principal initiatives, the first being in New South Wales, where we're exploring a belt of rocks called the Macquarie Arc, which hosts some of Australia's biggest copper gold deposits. We're exploring that belt to the north where it disappears under a blanket of cover. And we have a couple of joint ventures there with AngloGold Ashanti, which I think we'll get into here shortly. And we also have a large portfolio of properties we acquired from Newmont last year in the Northern Territory, where we're exploring for large IOCG or iron oxide copper gold deposits in the Northern Territory there. But the key here is they're big targets. They were on open ground and all required drill testing. So we're taking big swings looking for big deposits undercover.
Excellent. Excellent. And I'll preface too, I should have prefaced at the beginning, I own both companies personally, and I cover both companies in Junior Stock Review Premium, which I'm very happy about. And I participated in both of the last financings for both companies. So let's talk about exploration. You know, risk capital is something that is usually pretty hard to come by in the sector, depending on where we are in the cycle, especially. To me, the project generation business model is one of those things that I think makes it a little bit easier, especially for quality teams, to raise money and explore high quality geological ideas. Alistair, we'll start with you. Can you walk us through why you chose the project generation business model?
Well, it really comes down to just a good use of capital and really partnering up with a major mining company, particularly when you're exploring for porphyries like we are in, say, New South Wales. It really makes a lot of sense. The capital required to drill tests, like we are doing, big targets undercover, it's not for the faint of heart, and it does require significant amounts of capital to drill test these projects. And ultimately, we're looking for something, in our case, a bulk mineable target, underground porphyry type deposit. This is really the domain of the biggest mining companies, and it's a very challenging prospect for a junior explorer to drill test these specific types of deposits that we're looking for. So it's not necessarily the sexiest approach, but it's a very sensible approach in terms of being able to make the best use of capital to explore big targets. Ultimately, in our case, these porphyry deposits will be developed by a major mining company. We've just really taken the decision to bring in a major perhaps earlier than other groups, and we'll quite happily take a smaller piece of the pie, but preserve our share structure and not destroy the capital of the company by raising massive amounts of money early on in the exploration process. So it's really it's a very disciplined approach to deploying capital. We also have a structure which I'm sure we'll get into a little bit about. We receive a management fee for operating in behalf of the major as well, and that covers a lot of our corporate costs, all of our corporate costs, in fact. So it's really just a sensible, disciplined approach to exploration in my mind.
Absolutely. And both companies have been able to attract, very high quality partners. Alistair, sticking with you, what do you think it is that attracts the majors, especially like something like Anglo is a huge company. Is it the big ideas that they're attracted to? Is it the location? Is it the metal focus? Like, what do you think is the main drivers for like a senior mining company to approach a generation company?
So, from my perspective, it's really a combination of lots of things. I mean, I used to be on the other side of the fence looking at junior explorers, and I'd start with the jurisdiction. The exploring in the jurisdiction of which the major mining company wants to own their assets in the long term. Do they have a good strategy? Do they have a team, a technical team that's able to execute and deliver a discovery? Have they got the right perspective in terms of scale of the deposit they're looking for? That's a really big one. Are they really looking for something that would appeal to a group like Anglo Gold or one of the other big majors? I think a lot of junior explorers, in my opinion, fail on that one. They lack the sort of scale understanding. And then it's, do they own the assets? Is there a complex underlying deal? Is it an option deal where somebody has a retained 20% interest or a huge royalty? These are all key things. And then you look at things like, district scale land positions. Do they control an entire belt? Is it a sort of a postage stamp piece of ground where, you're surrounded by other majors? The majors really want to control the district, especially if they can make a discovery, then they've got, huge exploration potential. And a lot of the exploration upside that the majors build into their sort of their business case will rely on future exploration potential in a belt, not just necessarily the asset that the junior is exploring at that time. So they need to be able to see a runway, not just 5 years down the road, but potentially 20, 30 years down the road, where there's potential for further discoveries in that belt. So it's a combination of a whole pile of things, Brian. But it comes a lot of it down to basic things, scale, jurisdiction, technical team, and the underlying deal, really, in my mind.
Right. Well, let's go further with jurisdiction because I think it's a really good topic, especially as we move to Nevada. Nevada is no secret. It's one of the world's top jurisdictions for mining and exploration, and it's attracted a ton of people. Caleb, Headwater always stood out to me as having a fantastic portfolio, and I think that's really exemplified by my interpretation of who you are and who your team is in identifying those projects. But it's much harder to stake huge properties, like Alistair was talking about, in a very competitive state. So why does Nevada continue to stand out as somewhere where the senior mining companies want to be?
Yeah, well, I mean, I think Nevada has been recognized as perhaps the world's best mining jurisdiction for quite some time here, and there's a lot of reasons for that. But at face value, it's what you see. It's the endowment. Some of the biggest mines on the planet, gold mines on the planet, are in Nevada. There's multiple major mining companies that have built themselves in Nevada. There's new discoveries happening, all the time still in Nevada, despite the rumors of it being a highly mature jurisdiction. Anglo Gold, their new discovery down in the Beatty district, at least 16 million ounces, but probably going to be much more, all discovered in the last, within the last 7 to 10 years. So these things are still out there. And, pair the endowment and the ease of operating in the mining culture with the sort of stable geopolitical situation of the Western U.S., which is always a relative thing. The federal government in the U.S., you hear a lot of people, commentating on things, but look across the planet, there's really no other better place to be. If you find a deposit in Nevada, you will be able to build it into a mine. And that's the certainty that these sort of companies want when they're taking exploration risk. You can't compound geopolitical risk on top of exploration risk, on top of financing risk, and expect to be successful. So really, that's our approach, is to mitigate the risk across the board. And one of the things to do there is focus on the highest quality jurisdictions in the world. As you say, it is a bit competitive relative to other parts of the world, but I think that's where we fit in as a company that's very well established here. I live in Nevada. Our technical team is all in Nevada. We have a lot of Nevada experience, and that's one of the things that distinguishes ourselves and allows us to put together partnerships with groups coming often from outside of the state, because you do need that local knowledge, local presence to understand where the opportunities still are.
Right. Well, why don't you talk more about Jupiter? That news flow just came out in the last 2 or 3 weeks. I thought is the prime example of being able to stake a significant piece of ground in a highly competitive Walker Lane trend, and kind of lends on that idea where this sort of exploration upside of stuff like silicon. Can you talk more about that?
Yeah, so that's a recent example of something we've been able to generate on open ground out of our endeavors of constantly having geologists out in the ground undergoing big generative programs, looking for big scale opportunities and things that we can understand and acquire by staking on open ground and advance forward. And the proof is in the pudding there. There is still plenty of opportunity in Nevada if you know what to look for. And in this case, Jupiter is a very large alteration cell that only a portion of it had been focused on in the past. And we saw, stepping back, a much bigger system. All of the historic work, for the most part, had been focused on a couple of different areas where there's some gold showings and some historic mercury production. But when you step back, and for the first time ever, we were able to stake all of the ground. It had been held by different operators, different times, and various circumstances became open, and we were able to put it all together and then step back and say, okay, well, this is all part of one big geologic system here. We don't claim to fully understand it quite yet, but what we've been able to show very early on, which is why this is such a compelling opportunity, is we can vector within this big alteration cell to multiple discrete centers. We don't know where the best drill targets exactly are going to be, but we see line of sight to being able to systematically produce drill targets in this big alteration cell and test them. And that thinking from individual prospect scale to system scale is what kind of unlocked this opportunity for us. And that's really what's left in Nevada is good, solid, conceptual system scale thinking, often chasing things under cover or under barren alteration where there's no gold at surface. But that's exactly the sort of circumstance that led to the Silicon Merlin discovery, chasing high quality geology, recognizing the right alteration, and being comfortable taking the risk to test that at depth. That's the direction we're moving in Nevada generally, and it makes it harder because it's easier to go collect a few rock chips and say, okay, we got some gold here. Let's drill a few holes. But if that's your exploration strategy in Nevada in 2026, you're 40 years too late, I'm afraid.
And you know what? I think that point is only emphasizes the importance of people, and that's why I made the investment in you, Caleb, earlier this year, because I think your team is the separator in a very competitive market. So like that for me as a newsletter writer, as an investor, that's exactly why I picked Headwater to for Nevada exploration. Alistair, when it comes to geological thesis or selling a big idea to a senior mining company, do the projects just sell themselves, or is there more to it in selling, that idea to a company like Anglo?
So I'll probably follow on from a little bit what Caleb just said. I mean, it's not just the project itself; it's all those things I mentioned earlier, and the team piece is critical. So in the case of Inflection, we assembled a team of experts in these alkalic copper gold porphyry systems that we have in New South Wales. So, it's a complete package. Your majors are evaluating opportunities. Do these so does the team know what they're doing? Do they know what good looks like? How do they measure success and things like this? And can they pivot when a particular thesis doesn't work out? So it's a combination of things, and it's not just that project selling itself, but you're really aligning everything, as I say, from that district scale land positions to the structure of any underlying deals, the royalties and things like that. But it's really it's probably the biggest decisions you'll ever make is where you decide to explore. And again, it comes down to picking the right jurisdictions and things like this. So are you in a jurisdiction where the miners want to own their assets in the long term? That's a really big one. And so if you start going on exploring Timbuktu, well, there's probably only going to be a handful of groups that would want to come and explore there. Whereas, if you go to Nevada or Australia, a place like this, it's you're giving yourself the very best opportunity to attract a major mining company. So they certainly don't sell themselves, but you can put things in place that give you a better chance to strike a deal with the major mining companies. But as I said earlier, big targets and new targets. That's something that we've really seen over the last few years. I mean, a lot of projects have been recycled to the different times in the market. We see these things over and over come back and around. The majors have probably got an opinion on these particular assets. So there's definitely interest in doing something new. And that's obviously the space that we specialize in, coming up with new ideas and big targets that perhaps are a little bit binary, interesting with one or two holes. But again, got to have scale and got to be new, ideally. And ideally, you have to own 100% of it to keep it really simple. So it's really just making the stars align to give you the very best chance of being able to strike a deal with one of these major miners and ultimately, be acquired if you're successful with the drill bit and you make a discovery. So that's really the key points there.
For sure. And Alistair, looking back, like I've been a shareholder for I think a couple of years. So it's definitely more than a year ago that I bought shares and brought it into the newsletter. And what stood out to me was the JV terms. When I saw your deal structure with Anglo, it stuck out like a sore thumb, really, in a very positive way. I've been an investor full time for more than 10 years now, and I've looked at a lot of different deal structures for various project generation companies. And I would say Inflection stood out, especially at that time, as the best deal structure I have seen. So can you walk us through that deal structure you have with Anglo and why it's so important to you, Inflection?
Yeah, so just to step back a little bit, as I started off, we've acquired sort of the northern 50% of a belt of rocks called Macquarie Arc, which is host to some of Australia's biggest porphyry mines, including Cadia operation, which is Newmont's flagship operation in Australia. And this belt of rocks goes to the north and disappears under a blanket of cover. We extrapolated the known outcropping geology underneath this blanket of cover using sort of regional magnetics and gravity surveys collected by the government of New South Wales. And in doing so, we identified a large number of targets we consider analogous with these major mines located further to the south. So from the very beginning, it was going to require a real commitment for drilling. And we came up with a number of about $10 million to do a sort of a first pass scout drilling program across the entire portfolio, which extended over about 250 kilometers from north to south. So it was a big endeavor, not one you typically see being done by a junior explorer. So it was, in my mind, it was really was a major mining company initiative. And so we needed a big company to commit to drill. And AngloGold recognized this. And the first phase of the program was to drill essentially $10 million worth of holes over the entire portfolio of targets. At the end of that phase one, AngloGold retained the right to select a number of projects to take to phase two. And at this point, they would have to spend 7 million all Australian dollars on each of the projects to an initial 51%, and then an additional $20 million on each of the projects to earn up to 65%. And then the big one, to get to 75%, the majors are required to complete a pre-feasibility study with a minimum of a 1.5 million ounce measured and indicated resource. And critically as well, the Anglo in this case would have to issue Inflection a 2% net smelter return royalty as well on top of that. And that's significant because that royalty would give Inflection a lot of optionality to either participate and maintain our 25% interest at that point. Once we've received a pre-feasibility study report, we can monetize the royalty if needs be. We could negotiate with AngloGold in this particular case. I mean, there's a lot of optionality around that. But the key point, I think, where you're getting to, Brian, is it's really that commitment to drill. And we all know that discoveries are made by significant amount of drilling, and especially what we were doing, drilling through cover, looking for blind targets. It was really about getting lots and lots of holes into the ground, and Anglo recognized that early on. So that's really the key here. We've drilled about 150 holes now over the belt, all paid for by AngloGold, and it's been a great experience so far working with them.
Definitely. Deal structure is so important. And Caleb, moving on to, it's not only important to have a great deal structure, but especially to me as an investor, it really depends on who you're partnering with too. And you've got three great partners in who you decide to do JV deals with. And so can you talk about how important it is to have good partners and how that's, arguably as important as the JV structure itself?
Yeah, I mean, I think they're kind of one and the same. The deal structures are put in place to provide a mechanism to advance an asset, through the discovery stage all the way up to the pre-feasibility, feasibility, and then mining stage. And so if you're going to partner with somebody, to me, it makes sense to partner with a group that's capable of pursuing all those steps along the way alongside you, both from the financing side, from the technical side, and the operational side. And so that's why we really do focus on the producers. It's very clear what both sides want. We want to make a discovery together that ultimately becomes a mine in their portfolio, and all of the pieces are in place from the very beginning. And yeah, on the importance of the deal structure, I think I'll echo a bit of what Alistair said. I think all of these deals only make sense if they're good deals for both parties. And what we offer is effectively turnkey exploration capacity within a major mining company to give them a chance to follow that trajectory along the way from discovery to mine build. And I think the deals are quite logically built because Headwater's deals are similar to Inflection's in many ways. There's a minimum commitment phase. There's then incremental milestones to get 51%, 65%, and ultimately 70 or 75% through a PFS or a back end study. that makes sense to me because the two most important pieces are the front end. What's the minimum commitment to go test the initial concept? In our deals, that varies from a $500,000 US to $5 million US, depending on the opportunity and what's required to perform that first pass test. Then the incremental steps along the way are important, but I think less important than that first step and the last step. The last step, that study to show here's what we have, here's what we found out of our initiatives and our efforts, and that we each have a significant piece of it, and there's mechanisms to drive that forward into a production scenario. So I think it makes a lot of sense for both parties and makes a tremendous amount of sense for our investors who maintain a significant piece of a very large pie with no dilution or financing risk along the way.
Right. Alistair, your deal with Anglo is been a success so far. You've advanced two projects to phase two, which have $7 million spending requirements, which is significant. Can you take us through that success so far and sort of how you've broken down from that phase one to phase two, and where potentially these two projects might go to in phase three?
Yeah, so I mean, as I said earlier, I mean, the big initiative was a large scale drill program over a very large area, and it's we use this phrase search space reduction. We're trying to drill and kill and turn over as many targets as we can, and try and whittle that portfolio down of targets to really a few that we're focusing on. And right now we have two with Anglo Gold, one called Trangi and one called Ningen. And both, well, Trangi in particular is the one we're actively exploring right now. So we've been busy drilling away on that one. We're in the midst of a 83-hole air core drill programming, focusing in on and around an area where we had some early success with that phase one program. We intercepted 54 meters at just over 0.3 grams gold, which is not a headline number that might get people jumping up and down, but it's very indicative of the grades that we see in these porphyry systems in that part of the world. And critically, it came with the right alteration, the right geochemistry, and porphyry style veining and things like this. So we know we're on the right track. So right now it's this essentially we're grid drilling 15 square kilometers at 250 meter spacing with this 83-hole program, and we're about halfway through that, give or take. And the idea is we model that data up and then we plan some deeper holes. But so far, it's certainly confirming what we've intercepted already, and it looks like it's identifying a number of new areas as well. So it's all very exciting. I say drilling through cover is not easy, so we've taken very much a sledgehammer approach to this now, just grid drilling everything over this one particular area. But really going forward, it will be mostly deeper drilling beyond this sort of air core program, which drills typically about 30 meters or 25 to 30 meters into the basement sequence. But that's enough to give us a sense of what's going on down there. We can build a geological map based on alteration, geochemistry, and the geology and things like this. So it's going to be really drill focused going forward, and it looks like we've already got a number of new things to focus up with the deeper drilling once we get the results back from this aircore program.
Caleb, investors invariably are going to look across the project generation landscape. There's a number of companies doing this. What should investors be looking for or comparing or red flags that they can look out for to sort of protect themselves and make the best decisions they can?
Yeah. So I guess, probably the three main things I would point to, we've already talked a little bit about each of them, is the team that's driving the companies is obviously very, very important. The partners that they have in place already are very, very important, and the deal structures that they have in place on their projects are equally important. So I guess in reverse order, the deal structure is perhaps the most important because that determines what the size of the prize is at the end of the road. There's a lot of deals out there that effectively guarantee that the major or the junior is going to walk away with nothing but perhaps a small royalty at the end of the day. And so in my view, that's not really in the spirit of what we're trying to do as explorationists. So, focus on those deals, focus on the partners, make sure that they're positioned to advance the assets. Because again, if you have a struggling junior company as your joint venture partner who can't finance the asset, that does you no good either. So that's why we focus on producing companies that have strong balance sheets and are looking to deploy capital into exploration. And then the team, that's as important as anything, because a lot of what you should be looking for is, can they do this again and keep this going? The value in large part comes down to the sorts of opportunities that they continually can bring to the table and new partnerships that they can put in place. And ideally, you're not just buying a snapshot in time of a couple of joint venture deals. You're buying a system of continually exploring a particular jurisdiction or thesis or whatever it may be.
Alistair, do you want to add anything to the red flags or things
Well,
to look
it's
for?
yeah, I wouldn't say it's a red flag. I think one of the things that's perhaps a little bit misunderstood is the in some respects the deal terms. That there's a very little sensitivity to the dollars spent. There's a lot of pushback from certain groups in terms of, well, we're going to spend X million dollars versus X Y million dollars in sort of phase two and things, and really, if a major mining company makes a discovery or the junior makes a discovery in partnership with the major, really, the amount of capital required to drill off these discoveries is huge. So in many ways, there's very little sensitivity to the actual dollars amount, sort of earning to say 51% or 60% or whatever that number is. But to Caleb's point, it's really about the back end and the royalties and the ultimate ownership and the piece of the pie and things like that. So I think that's a bit that people struggle with. For me, it doesn't really matter what those numbers are, as long as there's a significant commitment to drill and enough capital to drill and make the discovery. It's all about making the discovery at the end of the day. So that's a key piece that we sometimes struggle with a little bit. But yeah, you want to be careful and not get diluted down too soon, and you'd have enough capital to make that discovery.
Excellent. Well, why don't we take question from the audience? And if you do have any, if the audience has any questions, please put those in. I'm taking a look right now. This is a good question, and I'll put it to Caleb because I've asked him, and we've talked about this numerous times. How do you choose which projects to JV and which to drill yourselves?
Yeah, so there's no you know cookbook answer for this necessarily, but in general, what we look to do is always seek the highest leverage opportunities within the portfolio. And sometimes there are opportunities that we're able to generate that have a very clear geologic thesis that can be tested for a fairly minimal amount of capital, say, between $500,000 and $1 million. We can go out there and drill a few scout holes and give ourselves a chance at making 100% owned, self-funded new discovery. And we typically do about one of those sort of high upside shots a year. And in the end, what often happens is maybe you miss the big home run swing shot on your first go, which is, almost always the case in exploration. You have to be pretty lucky in your first 3 or 4 holes to get into the sweet spot. But with that, we've been able in several different cases to have sort of proof of concept, quote unquote, technical successes at the end of the day that we were able to leverage into a partnership with the major mining company, because from their point of view, that the project was de-risked de-risked by virtue of the fact that we effectively proved our exploration thesis correct and demonstrated a vector towards where the best mineralization may be. And at that point, it requires more capital to continue chasing it, and they're willing to put the capital into a project to do that. And so we're able to do all that while still preserving that pure upside, high leverage shot for our shareholders. So, there's no perfect answer to that, and sometimes we don't drill all of our projects ourselves. We don't put a round of drilling into everything necessarily. Sometimes there's opportunities that we're able to generate that say, we say, boy, you'd need $3 to $5 million to really provide a definitive test of this. And our cost of capital is too high to justify diluting our shareholders down to raise the money to perform that test. And there's willing partners ready to do that. Well, those opportunities go straight into a JV type earn-in type structure. And so it's always a moving target. But I'm an explorationist at heart, so I'm kind of always looking through things from the lens of like, oof. Maybe we should drill a hole into this thing and see if it's there. But, you do have to be disciplined because you can't do that in every one. It's just, you would blow your share structure apart and run out of money. And discipline is key.
Definitely. I'd like to hear both of your opinions on this, but we'll start with Alistair. Are majors becoming more aggressive in securing quality exploration assets?
Are they becoming more aggressive? They're certainly doing lots more, as far as I can see, lots more strategic investments. We're seeing groups like Agnico, Centerra, groups like that. They're being very, very aggressive, acquiring essentially 9.9% positions. Teck is another group that does quite a bit of that. There's certainly a push to essentially outsource, I think, certain exploration initiatives in certain jurisdictions, particularly where the major isn't particularly active or they don't really have a significant team. So I think we're filling a little bit of a gap in that respect. But it's been kind of steady. But I think the big difference I've seen is that the majors are really looking for new things and new concepts and especially pushing in areas undercover. We're seeing a lot more of those sort of things, going a little bit further outside of the belts that perhaps they would have been in previous years. But look, I think the teams with the majors are a little bit perhaps smaller, and they're looking for groups like Inflection and Headwater to go and explore areas where they don't really have a presence. So I think that there's definitely a push to partner with groups that know what they're doing in specific parts of the world and have a presence and a team and well established there and things like that. But I think overall there is an increase, especially if you got some good ideas with large targets.
Caleb?
Yeah, I think there's absolutely an increase in overall interest, and to me, it's kind of fairly obvious when you look at the balance sheet of these producing companies that are sitting on a lot of cash, making a lot of cash, and now over the last year or so, I think beginning to think more and more about the growth trajectory of their production pipeline. Because the mining business is one in which you're constantly depleting your assets by mining that. You need to make new discoveries to keep the whole thing going. And now's a time where these companies are cash rich and are looking for opportunities to deploy that capital into potential growth areas of their business. As Alistair said, there's less and less internal sort of organic exploration going on in the big companies. They've all sort of went through a decade period where they've been trimming down overhead and costs and focused on margins, and in many cases have went away from that large in-house greenfields exploration team, and that's really where we fit in, where we can present them the opportunities that they want to see, operate them at a standard which they need to see from a health and safety environmental perspective, and really offer them a bolt-on exploration capacity into their organization. And for those sorts of things, I think that the market has never been better, probably in my mind. We're very, very, very busy talking with our existing partners and potential new partners on all number of different things. And I think that reflects, just the healthy budgets across the board and the desire to continue to grow.
Another question from the audience, and this is again for both of you. We'll start with Alistair. What are the catalysts that investors can look forward to over the next 6 months? So basically, ending the year.
Yeah, so Inflection is all about drill results, really. So as I mentioned a little earlier, we've got a 83-hole drill program going on right now on one of our projects called Trangie. That will be followed up presumably with some deeper holes. We've been planning a number of those already, following up on some of the things that are coming out of that. And then we'll also be drilling some of our additional projects that are not joint venture to AngloGold in New South Wales. There's one in particular directly to the south of our Trangie project, a target that we acquired through staking last year, and had some historical reference from the late 80s to bornite and chalcopyrite intercepted in some scout drilling just on trend from our Trangie project, where we know we have porphyry style mineralization. So we're going to be doing some drilling on that project. And then the plan right now is to do some initial drilling on our projects in the Northern Territory in Australia, the projects we acquired from Newmont as well. So we've been waiting a little bit for the area to dry out. Northern Australia has a little bit of seasonality associated with it, so it's really from about May onwards we're able to get in there and drill. But that's the plan right now, both drilling in New South Wales and in the Northern Territory, as well as some ongoing project generation work as well.
Caleb?
Yeah, so as I indicated, we're very active right now. That's one of the challenges, trying to tell the story across the portfolio of 15 projects. There's always a lot of different things happening. I suppose the main immediate catalyst for us right now are we're about to kick off two different drill projects, one in Nevada, one in Idaho. Our Jake Creek project with OceanaGold and our Crane Creek project with Centerra Gold in Idaho. Those will be starting within the next week or several weeks. On top of that, we've just received results from a handful of other drill projects that finished up over the winter, and we're looking towards putting together next steps for those. So there's three potential additional follow-up drill projects at Lodestar with Newmont, TJ with Oceana, and then another new project called Hot Creek with OceanaGold. So that kind of rounds out the partner-funded side. And on the self-funded side, we're very active on staking and generating new targets right now, such as Jupiter, and there's more in the pipeline that we're working towards putting together. And on the self-funded work, we're advancing several different projects through fairly low-cost in-house work, mapping and sampling, and a little bit of geophysics, and ultimately looking to get those projects to that stage where we say, okay, do we want to take a crack at drilling one or more of these, or are we going to pursue additional partnerships on them? So really everything is on the table at this point, and all things are happening in parallel, but there'll be a lot of drill results and drill programs kicking off here through the summer and into the early fall.
One last question from the audience, and this one is specifically for Alistair. And I'll summarize the question. The viewer wants to understand the difference you see between being CSE listed versus being ASX listed, and whether an Aussie listing would be more natural for Inflection to be on.
Yeah, it's a question I get a lot. It's really Canadian versus Australian listed. Yeah, look, when we started this company, really the market was very soft in Australia, and we did a little bit of marketing over there with a potential view of an ASX listing. But ultimately, the initial capital came from North America and Canada. And ultimately, our major shareholders from the very beginning are based in North America. So that kind of really pushes down the route of a North American listing, a Canadian listing. An ASX listing is certainly on the table. But what I've always said is we need a kind of a catalyst to justify that. And that will really be hopefully in the form of a large discovery. To do an ASX listing as part of a dual listed company, it really costs about $500,000 to do that. So it's not insignificant. And, this is legal fees and corporate fees associated with all of that. And we want to put the money into the ground and focus on making that discovery. If we can make that big discovery, I think, it's fair to say we would look at pulling the trigger on an ASX listing as well. But I think without that, really, it is kind of tough to justify that amount of capital to do that. And the company's well financed. We've obviously got a partnership with Anglo Gold that's carrying a lot of the costs and things like this as well. So, we're not constrained really by capital at this point. But yes, I think there's a time and a place. I don't think we're there as yet for an ASX listing, but it's certainly on the table for the future.
Well, that's great. Guys, thank you so much for the time. For the viewers, thank you for watching. You, of course, can find Headwater Gold information. Is headwatergold.com? Is that? Yeah, how about you guys give the websites? That would be great.
Yeah, headwatergold.com. HWG is the ticker. HWAUF in the US on the OTC.
Yeah, and it's inflectionresources.com, AUCU in Canada, and AUCUF in the US.
Excellent. And again, my name is Brian Leni. I'm the editor of Junior Stock Review Premium. That's juniorstockreview.com if you're interested in the newsletter. Guys, thank you so much for the time. And any questions, you guys can reach out to the both companies or myself. Thank you very much.
Thank you.
Thanks, Brian.